Financing for Development, Unlocking Investment Opportunities. European Bank for Reconstruction and Development, focus on mobilizing private finance, with Suma Chakrabarti.
The MDBs are doing a lot in terms of the SDGs. Really, the thing we've got to do is make sure we deliver them. Part of that's about money, about finance, of course, but part of that is just about being much more creative, more innovative, so we actually create a momentum for delivering these SDGs by 2030, and that's a big task. The EBRD can contribute in a big way. Now, the old MDGs, and I'm a fan of the MDGs, the old MDGs really spoke about social outcomes, development in the social sphere, health, education, and so on. But they didn't really tackle the economic development outcomes, infrastructure, energy. Issues also such as inclusion weren't really covered by the old MDGs. Now, the SDGs, the great thing about them is they cover those areas. We've got a real chance now of helping achieve these SDGs through investment in infrastructure, in energy security, energy efficiency, but also doing things like trying to help female entrepreneurs get through to access to finance, which have been denied in the past. It's really, really important for us and other multilateral development banks to show that public services are being delivered even better for citizens in developing countries. So municipal services, municipal infrastructure is going to be a big thing for EBRD as well going forward. There's no doubt private finance is going to play a very big role in delivering the SDGs. The old MDGs were very dependent on grant aid. Now, we still need grant aid. I don't want to let bilateral donors off the hook on that because it's fundamentally important for us to be able to do things in rather poorer countries, in the social sectors, but also to blend with the MDB financing as well. But for us, I think we have to really try to get more private financing into the financing of the SDGs. To give you some examples, we in EBRD, typically for every euro that we invest, on average we attract about another 2.5 euros in from private sector financiers into our projects. That's on average. In the sustainable energy area, that leverage is even higher, much better in fact. But we can do more. We can help, I think, by bringing better projects to private sector finances, particularly in the infrastructure sector, where many projects aren't very well put together. So infrastructure project preparation facilities are really, really important. Risk mitigation measures are going to be important. Pooling of risk, guarantees, all those sorts of things are going to be fundamentally important for the private sector to put more money in. We're going to have to develop local currency and capital markets, because a lot of the companies in poor countries really don't need the foreign exchange risk. They shouldn't have to carry that. So we should really try and finance those things through local currency financing. And of course, the big task is to get long-term capital into equity financing in poor countries. That's where sovereign wealth funds, pension funds, they become really, really important as a way of attracting funding into the SDGs. Finally, I think, if you're a private sector financier, you also want to look at the government. You want to say, is this a country I want to invest in? Does this country have good policies? Does it have better institutions than average? Are the institutions improving, economic and political institutions? Does it have the right leadership that will really, really push for change and will actually help the sort of investment I, as a private financier, want to make? And finally, all private financiers look for consistency in the policy framework. What they can't stand is policies changing every other year, perhaps because of the political cycle or for some other reason. They need consistency in policy, and that is something very, very important too. Well, I think one of the fundamental things for countries, for governments, is to really improve their investment climate. And they've got a number of things to do. So they could start by looking where they are at their position on the league table, on the Doing Business Survey league table, for example, that the World Bank puts out, or in business enterprise studies that we and the World Bank do together, we at the EBRD do together, or in Transparency International indices. If you look at each of these indices, it gives you a pretty good idea of how you as a country are perceived by the private markets, by often private sector investors who may be shy unless you do something to improve your league position. So, for example, it could be actually about getting better electricity supplies into the economy. It's making electricity supply more regular, for example. But it could also be things like making sure electricity tariffs reflect cost. so that actually investments in the power sector will be viable. So there's a whole heap of things in the investment climate and governance area that I think investors look for from countries before they want to invest in the SDGs. The MDBs and EBRD as part of the MDBs can of course do more. We have to do more. The billions to trillions agenda is there. We've signed up to it. We are going to scale up, we in the EBRD, and so the other MDBs too. We recognize the need to do more. But we also need to recognize the need to do better, not just more, but better, be even more effective. That means doing things to improve the way we work together, the way the whole multilateral development system works, so that we can actually cooperate better across boundaries. We need to look at our own internal processes. We need to look at what we can do to really make ourselves more efficient, faster, because one of the criticisms, of course, many developing countries have of the MDBs is that we tend to be too slow to respond to what they need on the ground. So we need to respond much faster than we currently do. That requires us to take a good, hard look at ourselves, maybe on our own, but also, I would argue, take a look at ourselves together as a group. The SDGs will be delivered because we cannot afford to fail. This agenda sets out the complexity of development in all its characteristics. Yeah, there are 17 goals, there are 169 targets. I would argue that those goals now show development in its entirety. And if we are really to make a really strong push to fight poverty, to fight deprivation, to help countries transition to a better economic and social future, we cannot afford to fail. We must succeed.